Hi, Pam. Pam, I think you're on mute.
Happy Friday.
Happy Friday. It's definitely a Friday. All right, we're running a little late today. We had some technical difficulties, as usual, with me and Facebook, but I think we have solved those. So I'm super excited about that. And we've got a couple of things going today, right?
Oh my goodness. Another crazy week. When is this going to settle down? You know, we have a new normal. Now we're letting go of some of our restrictions. And so we have a whole nother level of craziness, and round 2 of SBA PPP is in full funding. It's just, it's crazy.
It is really crazy. I do want to say a couple of things before we get started, because we've got some slides today. And as we do slides, and as I look at the slides from the past, I want everyone to realize that the information we're giving you today is the best that we know at the moment, that things change. So like, I don't know, Pam, was it 2 weeks ago when we went over all the changes that they had made in the PPP? So realize that this is the best information that it's out there. We try to always go to source documents when possible, but interestingly, sometimes the government doesn't follow its own source documents, so there you go.
You can't knock a girl for trying.
You can't knock a girl for trying, absolutely. All right, I am going to share a screen really quickly. Don't know what I just popped up there. All right, Pam, what do you see now?
Why getting a CARES Act loan is like winning the lottery.
All right, you and I both definitely believe this, right?
Yeah, and I think the PPP and EIDL people feel the same way, and they're two separate animals.
Well, I think before we go into the two separate animals about the PPP and the EIDL, I do want to think there are two ways that getting a CARES Act loan is like winning the lottery. So one way is, holy cow, I actually got one. Because I've talked to some people that have gone through incredible lengths. And I was on Facebook, so I've been active on Facebook recently. And I was going through and someone said, oh, you know, whatever bank isn't getting back to me. I'm like, try Lendio, because they got somebody approved within 24 hours, and then they got one of our clients approved in 6 hours, which is like amazing.
Blue Vine did the 6 hours.
Blue Vine was 6 hours. So anyway, so I said, try Lendio, because this person got approved in 24 hours. And she's like, yeah. Lendio has been like radio silent for her for like a week. I'm like, holy cow, it's like playing whack-a-mole. Like, yes, this one thing works, and then the next minute it doesn't work. Blue Vine's great, Blue Vine's awful. Lendio's great, Lendio's awful. Like, so I'm just gonna say something that I never thought I would say. Apply often, apply everywhere. If you apply multiple places for a PPP, whoever gets to the SBA first, any subsequent applications just automatically get kicked out. So I think a lot of people that we're talking to feel like getting a CARES Act loan is like winning the lottery, because wow, they actually got it. Mm-hmm. You and I look at that differently.
Mm-hmm. Yeah, it's just scary because it's a lot of money that's coming into these businesses, and we still don't have complete guidance on forgiveness on either one of the loans.
Yeah. The other thing that concerns me is like lottery winners, people who win the lottery, what happens to them usually within a few years?
They lose it all.
Bankruptcy.
Yeah.
Yeah. They end up worse off than if they hadn't had it in the first place. So that's part of why we're doing this today. We really want to focus on that and how you can prepare and have a plan and make sure that you are using this money wisely, both especially with the PPP to get forgiveness, but also just so you get the maximum value out of it.
Well, and that's the thing, Brooke, is that, we've talked to a lot of our clients through this, and it's not a one size fits all solution, right?
Mhm.
It's a double-edged sword. It could be a huge gift and a blessing for one company, and a huge curse and bring down another. And I think that, talking about finances is a private thing. And so people only tell you what they want you to hear, right? It's like
Is it
gamblers.
It's like the Instagram version.
Yes, or gamblers. They only tell you about the time they won. They never tell you about the 8 times they lost, right? Or 800 times, right? So I think as we all measure ourselves, whether it's on Instagram or Facebook or whatever, just know that you need to talk to somebody who has your whole picture to help you make the best decision for you and your business.
Yeah, I agree. So in that same vein, we were going to talk today about why it's like winning the lottery. But before we really get into that and the planning for that, we wanted to talk about the EIDL loan, because we're trying to stay, I don't know, maybe not a step, but like half a step in front of everybody. Hold on, I'm going to stop sharing this for a second. We want to stay like ahead of the curve if we possibly can. And so I was talking to a reporter from CNBC this week and said, we're really, as we were kind of hanging up, I'm like, we're really concerned about the EIDL. Almost all of our clients have gotten their PPP money. We've got that under control. We've now had 3 clients that have gotten the EIDL funds, and it's a whole different ballgame, and it's a very different type of loan. And I don't think that people really understand. And he's like, what do you mean? It's like a government loan. I'm like, no. So I started talking to him about it, and he's like, oh my gosh, really? I'm like, yeah, this may not be the right loan for a lot of people. So I know we promised one thing. We're going to do a little bit of a bait and switch. I want to spend like 10 minutes going over the EIDL loan, because a ton of people have gotten that EIDL grant. They were running about a week between the grant and your ability to open your loan portal. Mm-hmm. I think we're beyond that now, because I personally think I got my grant like 10 days ago. So
yeah, well, you have to know that the number of applications increased exponentially. And so if you have a bell curve, right, we're like, right.
Yeah, we're on that big upswing. We're processing the upswing. So, so we really wanted to talk to people about this so that you can make an informed decision. Because I thought, yeah, if I get an EIDL loan, that's going to be great, and the things I can do with it, and kind of getting excited about it. And then I started to learn about it. And I don't know that it's really right for me or for everybody. So I'm going to share my screen again. And let's talk about it a little bit here.
Before we go into the EIDL loan itself, and I'm not sure, maybe I'm preempting you here, the EIDL advance.
Oh.
A lot of people have the feeling that the EIDL advance is a grant.
Okay, so can I use an attorney's favorite phrase?
Go for it.
It depends. Mm-hmm. And it really does. If all you get is an EIDL, whether you get just the EIDL grant or the EIDL grant and the loan, yeah, in that part, it's a grant.
So you did not apply for PPP is what you're saying.
If you do not have a PPP. And however, if you have a PPP and you got, and I'm just going to use round numbers because I can do easy math, right? Like, don't give me complicated math to do in my head, unless it's a fraction. I'm really good at this. Okay, so if you got a $100,000 PPP and you got a $10,000 EIDL advance, and let's be very clear, in the legislation, half the time they called it an advance and half the time they called it a grant. And at the time, it confused all of us to no end. Do you remember that conversation?
Oh, I do. And everybody's like, you're not hearing me. I'm like, no, you're not hearing me. Is it forgivable or isn't? I mean, we went round and round and that was a heated discussion.
Yeah, with 6 of us on the phone.
Mm-hmm. Like, very smart women, by the way.
Yeah, and everyone's got the bill up and I'm like, but I'm looking at line blank and it says grant, and you're looking at line whatever, and Pam's like, it says advance. We finally figured out why. So if you don't have a PPP, it's a grant. If you do have a PPP, what's going to happen is if you got a $100,000 PPP and you got a $10,000 idle advance, because it is now no longer a grant, you got a PPP, so it's an advance, only $90,000 of your PPP is forgivable. Basically, max forgiveness under the CARES Act is 2.5 times your average payroll.
So the max forgiveness is your amount of your PPP.
That's right.
So let's just, I just want to make sure everybody appreciates the nuances here, right? So we all went to all our various banks. We applied for the PPP. Then we got funded. And then mysteriously one day, $1,000 times the number of full-time equivalents, FTEs, that we put on our idle application shows up in our bank account with somewhere in all the detail from the bank. It says SBA and it might even say idle, but it just mysteriously shows up.
It was US Treasury. And
US Treasury, SBA, and I think it might have said idle as well.
I may not have read that part.
So no documents.
Nope.
No phone call, no email, no nothing. This mysterious, nice round $1,000 multiple shows up in your bank account.
Yeah.
Okay.
Isn't that kind of wild?
That's what we're talking about. Is it can be this $1,000 per full-time equivalent can be forgiven and rolled in as part of your PPP, or it can be not forgiven.
Well, actually, it's forgiven if you don't have a PPP. If you have a PPP, it is not forgiven.
Okay, right. So
essentially what you'll do is, let's say it was that $10,000. You got the max, which was $10,000, and your PPP gets reduced by $10,000. At the end of it, your PPP forgiveness amount gets reduced by $10,000. At the end of it, you're going to have a $10,000 loan at 1% interest.
So what you're saying is I will never get any documentation for the idle advance, this mysterious $1,000 amount.
Not that we know of.
But I will see an impact on my PPP forgiveness that my lender and I work through after my 8 weeks are over.
That is correct. And my guess, I don't know this, but my guess is that you will have to self-report that.
So
because on the application, it said, have you received an idle advance? And at the time I answered no, because I hadn't. My assumption is when I go in to go for forgiveness, they're going to ask that question again. So it will be a self-reported number.
Right. So I've asked many of the clients what guidance they've been given, and I know we're going to talk about forgiveness in the second half, but I'm eager to hear. I don't know if anybody can go into the chat or whatnot, or email us at Brooke or Pam at CathCap.com and see if anybody's actually gotten any guidance from their lenders on forgiveness, because the answer I've been getting has been the SBA hasn't told us anything. The SBA hasn't told us anything.
Yeah. So. I've been getting that. I've also been getting we want to get this forgiven. We want you to get this forgiven because we don't want a 1% loan on our books.
Oh, who does, right? So, yeah. Okay, back to your, sorry, I hijacked it.
hijack away. I mean, come on, this is casual. And there was something else that you said in there that I wanted to talk about. Oh, remind me to talk about PPP repayment when we get there.
Okay.
All right, so we're going to go back. We're going to share screen again. We're going to get good at this. All right, look how quickly I did that. All right, so we're going to thank you. Sometimes I need a little clapping and appreciation. All right, so we're going to talk about the facts surrounding the EIDL loan. We're going to talk about decisions you need to make before you apply, how to use it, compliance, financial planning, and the pitfalls to avoid. So I am not sure I have these in the right thing anymore. Huh, okay. We're gonna have to talk about these first two just chatting. Before you apply, Pam.
Yes.
What should you be thinking about?
So I think that you need to be thinking about the risks. I think you need to be thinking about.
Well, here, we can talk about risks. Let's
Okay.
talk about.
So
Go for it, all you.
So there's misuse. You need to be aware that there's personal guarantees if the amount is over a certain dollar amount.
That's 100,000.
Right. But there's lots of vague legalese. I mean, it's a loan document. Okay. So there's lots, we've reviewed several of this, and there's a standard loan document. So it's not like when you're dealing with your local bank where you can negotiate terms and conditions. It's a standard set of documents. But there's some serious penalties if you misuse the funds. And so the penalty is 1.5 times the loan.
The total loan, not what's outstanding, right?
The total loan. And then I would argue that the loan becomes payable, right?
Yeah.
Due. The loan gets called if you misuse it. And then you have to, so let's take the scenario that you get a $500,000 loan and you misuse the funds.
Okay, wait, let's talk about what misuse is.
Oh my goodness. It's a lot of things.
So, all right, can I use it to move my office?
No, you can't.
Right.
Basically, they say you need to use the loan for income statement items. So wages, rent,
Marketing.
marketing. Right. All those kind of things that you need to do to operate. They don't want you to use it for balance sheet items. You can't go out and buy fixed assets. You shouldn't be going out and using this funds to move. For your example, no. You shouldn't be dividending this out to the shareholders or the owners, right? You shouldn't be restructuring your debt. Okay, this loan is being given.
No car buying.
Right, no car buying. No
car buying.
Right.
All right, wait, I have one more to ask you about, because this is one, I think you're going to give me the lawyer answer. What if I went out and bought new computers?
Maybe. Are you going to expense them? Or are you going to capitalize them?
That's the question. If it's something, and I think and I'm not a tax expert by any stretch of the imagination, but as we've gone through, it used to be anything that was over $500, we would put on the balance sheet and capitalize and call it an asset. Anything under $500, we would leave on the P&L and we would expense it. We just pay for it all at once. If you put it on the balance sheet, you depreciate it. If you put it on the P&L, you know.
Right. And so through, as we're navigating these unforeseen times, right? Oftentimes one good financial principle to hang your hat on is be consistent, right? So if that was your internal policy for capitalization before COVID-19, For goodness sakes, don't change it now.
Don't change anything.
Right? So again, quick and easy on uses is it seems to be you can do things that are income related, but you cannot do things that are fixed asset related or balance sheet related. Okay.
All right. Personal guarantees. What do we need to know?
Just that they've run your credit, that they're going to file a UCC, which is going to tell everybody else that they have a stake in your business, and that if things go wrong, they can come after your house. They can come after your personal cars. They can come after a whole variety of personal assets.
And that is if you sign a personal guarantee. It's my understanding that you don't have to sign a personal guarantee if it's under 200,000.
Yes, that's my understanding as well.
So that's as you're deciding if you're going to take these loans. If you're offered $500,000, you may want to take 199,000. Now, what we don't know is what happens if your business declares bankruptcy, the loan is under 200,000. It doesn't have a personal guarantee. We don't know what happens in bankruptcy. A lot of government debt is not dischargeable in bankruptcy, but we're actually going to have a bankruptcy attorney come on, hopefully next Friday, right?
Yes.
Yes,
because I think there's a lot of questions. I mean, you and I were talking that one of a favorite retailer is declaring bankruptcy this week. So I think bankruptcy is going to be a very, very timely topic.
Yeah. So personal guarantee, if it's over 200,000, which means your house, your car, and oh, by the way, if you have signed a personal guarantee and if your car is in what you are using to guarantee it, you can't sell your car without asking the SBA. And Pam, how long do these loans last?
30 years.
So longer than my mortgage, because I have a 20-year mortgage.
Yeah, Brooke, I'm not going to tell you how old I'm going to be in 30 years, but I am not going to be talking about idle loans in 30 years. And I think that's the other thing, and that this gets to the planning piece, but just because they say it's 30-year money, you might choose to repay it in less than that because of all the hooks that come with that. So we've talked about misuse and the penalties there. We've talked about personal guarantees. Collateral, if you're a service-based business, there's not a lot of that, particularly if you're below the personal guarantee amount. But I do think that a lot of particularly our clients, but people in the service industry, they don't think through, or they've never had a real loan, right? They might have had a line of credit, but they've never had a term loan, okay? And so they think they know what this loan is, but this one has covenants that you have to make, and that you can trip a covenant, you can default over these 30 years at any point in time. And so it's important to know what some of these things are. For example, let me pull up my list here.
Well, here, let's keep moving, because
Okay.
we can talk.
I think what's important for people to know is right now they're pushing this money out into the economy. Okay. People are taking this money. It's kind of like winning the lottery, and they may or may not have a plan. Their plan may or may not be a good plan. They may or may not have accountability. The accountability is going to follow the flow of the funds. Okay. And so you have some annual compliance that you have to do with this loan. Mm-hmm. And like we all know, when you submit compliance, you may be tripping a covenant, or getting on to the next risk, you might be encouraging them to audit you.
Yes, and who pays for that audit?
Me?
You, the person who took the loan. Yeah. And here's the thing, like some of those covenants are a little tricky. So like, for instance, you have to submit your financials 3 months after the end of your fiscal year. Well, you can't just pull your financials off of QuickBooks and send them. They have to be reviewed financials, which means they've got to go to a CPA and they have to write a report.
Oh, can we talk about that? Because I understood that they don't have to be reviewed unless they ask for them in writing to be reviewed. I thought that.
I'd have to go back to the documents. I could have misread that.
I think that they can review them. The question is, I think they have to notify you that they have to be reviewed. And again, that gets back to, they're going to put all this information, all of your information into a database, and they're going to develop some artificial intelligence kind of algorithm to look through the data and find things that cause them to ask for more information. And the goal is not to trip those things, but we don't know what all those things could be. It could be financial statement ratios year over year. Well, those aren't going to be tripped in the first year because you're giving them your financials for the first time. But it might happen in year 5.
Yeah, because one of the things that it says, and we may get into this a little later because I'm not entirely sure what all we've got in here. But if there is a material change in your business, like if you hit another rough spot, then you're.
Yeah, I'd like you to give me a definition or a list of what could be a material change.
Right, we don't know. That's exactly what you're saying. All right, so let's talk about idle uses. Things we should do.
All right, do's and don'ts. Use it for working capital. So that's, invest in inventory, invest in your people, pay your debts that are current type things. So rent, not debts. I'm sorry, I used that word wrong. And I think honestly, they've used it a little oddly on a presentation of the SBA I looked at, but use it for current things, right? Things that you need to operate your business. Okay, but don't use it.
Well, it's interesting because one of the things you said was for inventory, but they're pretty specific about what inventory you can use, for which you can use it. It is your everyday inventory. You cannot use it to like buy a whole bunch of extra inventory and kind of hoard inventory. That's going to trigger one of the covenants, which is so interesting. All right, so let's talk about the don'ts.
So don't change your balance sheet, and I think that's what you were getting at. Don't show a large increase in inventory. Don't buy fixed assets with this money. Now, if you have other money, yes, you can do that, but they're going to want to see proof, and we'll get to what they want to see of how you've used these funds. So it's like, don't stop your business, but don't commingle the funds to a point that you can't report out and you can't show them that this $500,000 that they gave you was properly used for income statement items. So don't pay yourself a big dividend. Don't pay off high interest rate loans that are more than 3.75% with this money. Okay, those are the basic don'ts.
Yeah. All right. So let's talk about the compliance checklist. So I think the first one that's really important is collect and keep all your invoices, like document. Because
and most of the software that's out there, particularly QuickBooks, has some really slick features that you can have it at your fingertips.
Yeah, you can make it so easy because yes, you are going to get an influx of cash. And yes, you are going to want to pay down debt. You just have to make sure that you can trace the dollar that came from the SBA got spent over here on office supplies and not that it got spent to pay down this debt over here. So documentation is huge. Insurance was a big one for them.
Well, right. If you have collateral, a lot of people that are not in the service space own buildings, they own equipment, they own inventory. They want to know that if we have a hurricane, or I think where you live, you have a lot of tornadoes. that if there is damage to what is securing this loan, that they still have a way to get their money back.
Yeah, and it's the magic number for them is 80% of the value. Okay. So if you've got $100,000 worth of collateral, you need an $80,000 policy on it.
Right. So if you have cars on your balance sheet, then you would have to have this insurance on those cars.
Yeah. All right. American-made products.
Where's our flag?
Mine's in the closet over there. All right. So yeah, you have to buy American-made products. Interestingly, it is then followed by the two words, where possible. So are you going to have to go through and look on the back of the packet of pens at Office Depot to make sure that they are?
How about my Post-it notes?
Yeah, I don't know where did that
come made.
I think that in most cases, this is looking at larger assets or larger purchases. I don't think they're going to come audit your I don't think the pencil pushers are going to come audit your purchase of pencils. But
right, but like with so many seemingly innocent requests on a compliance checklist, we all know that when anyone gets audited, that the auditor has to and will find something. Mm-hmm. If this is all they find, then that's a win.
Right. But it's also saying buy a Dell computer and not a Samsung.
Fair enough.
You know, those are kind of things to think about. All right. We talked about insurance a little bit, but maintain financials and taxes. You want to talk about that a little?
Right. So right now, most entrepreneurs have only a handful of people that look at their financials. And in some cases, it's only them. But now somebody else is going to be looking at your financials, and they're a far more sophisticated reader. So you're going to want to make sure that you have good financials and that they can stand up to scrutiny. Insurance, you need to make sure that you have adequate insurance for the business. And again, that can vary, but at a minimum, this hazard insurance. And last but not least, there are a lot of taxes that small business owners kind of stumble into, right? So you have your payroll taxes. We all know about income taxes, but then there's sundry ones like sales taxes, and a lot of businesses, stumble upon that. And it's much better if you have an advisor on your team that can point out where you might be at risk. Some people have independent contractors instead of, and they might be at risk for those being W-2 employees. The point is that if you are not aware of the taxes that you should be paying and you have not accepted the risks, you might need to mitigate those risks now. Because
okay, what happens if you're 60 days behind on your taxes?
You got to catch up.
You've defaulted on your loan.
Yeah. Oh, in the future, right? I thought you were talking about if I was 60 days late today.
Yep.
I cannot use the idle money to pay the government back their taxes. I know that.
Yeah, they are kind of funny about that. So yeah, if any time over the next 30 years or until you have this paid back, if you get 60 days behind on taxes, you've defaulted on your loan.
Yes, yes.
Reviewed financials, we talked about this a little bit, and you and I aren't sure because we read it differently. So we'll get you a better answer on whether those financials that you send them have to be reviewed. And then this one, you got to adhere to the EEOC.
Which we all try to do.
No discrimination. And you have to post, what is it, Form 772 or something that says we're not going to discriminate.
Okay, so, I'll trust you.
I don't know what it is. So, but there. Okay. So let's talk about financial planning. because this is something that you're really, really passionate about. Right?
So you're taking a loan. And when you take a loan at a certain interest rate, knowing, having confidence that you can turn that money in, get a return higher than what you're paying on the debt. So,
because, wait, can I break in? For a long time, Berkshire Hathaway did not pay dividends. And do you know why?
Because they reinvested in the business?
The Oracle of Omaha said that he could make more money on that. He could increase the value of that more than you could.
And he was probably right?
He was really right. So it's the same thing that you're saying. You know, the assumption is you're going to take this money at 3.75% and you're going to deploy it and use it and get a return bigger than 3.75%.
Right. And so I guess I'm gonna deviate for a minute. I have a client, and he
nameless.
Yes, he didn't want debt, and he has reasons. He has very good reasons. He's had debt in the past, and he's very proud that he's not in debt anymore. And so he doesn't want to go backwards. But then I kind of poked the bear a little bit, and I said, "Come on. What if your competitor is getting all this money? Don't they have a competitive advantage?"
Mm-hmm.
And he said it with just, no emotion to it. He goes, "Oh, they'll waste it."
I think he's right.
Okay. Because they don't have a plan, and because their plan is not repeatable, because they don't have accountability, right? That he knows that they'll like the lottery winners, they'll waste it. And I think that's what's causes me to pause and causes me to work hard with our clients on this planning, is because the amounts that they're distributing are overwhelming for business owners. They've never had access to this kind of money at this rate. They have dreams, they have aspirations, they have ideas, they have ADHD, they have random acts of marketing.
Really?
But
I don't resemble that remark at all.
Right? But it's like what Tony Fauci was saying this morning on contact tracing. In its very simple form, tracing contacts sounds easy. But then you add the scale, or maybe it was Governor Cuomo, I don't know, one of the talking heads that it might as well be a part of all our families at this stage, was saying that there's something that happens when you apply scale to something. So having a $10,000 loan, line of credit, or a $50,000 loan or line of credit for that matter, is exponentially different from giving $500,000. And if you don't have some procedures or some accountability, unless you're a very, 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 very disciplined person, you will spend this money and then look back and go, I guess that didn't work.
Yeah. I don't have anything to show for it.
Right. And so that gets us to the plan, right? So you have this money, and because of this, a lot of people that we know that are getting this idle money are really holding this information close to their vest, because what else happens when people hear you have money? They want a piece of your pocket. And why not? This is America, right? So they're going to tell you and promise you the world, right? Oh, I can triple the amount of leads you have. Just give me $20,000
a month. No
right.
problem.
And before you know it, you've spent the money 3 times, which we all know that our clients tend to do when it's sitting in the bank.
Yep.
And these $20,000 amounts add up. And then before you know it, you got nothing to show for it.
Yeah.
So a lot of people are keeping the fact that they're getting idle money very, very quiet. Because it's like, again, the lottery winners. Who's the smartest lottery winner? The one who does not present their ticket on the first day.
Yeah.
They go off, they hire a financial planner, they hire an attorney, and they take their time.
No. Okay, Pam, we have 15
Yes.
minutes left. So we're
Oh
going
my goodness, so much fun here.
get through. All right, the 3 things that we need to know, the biggest 3 problems or the pitfalls is the misuse penalty, 150% of the original amount of the loan due and payable on that day if you spend it wrong. 2, defaulting on the loan, because you can default on the loan by breaching any of these covenants and not even realizing you're doing it. I mean, literally in year 27, if you move your office without asking for permission from the SBA, you've defaulted.
Or if you die.
Oh yeah, dying, that's a good one. Yes, if you die, the whole loan is due. So, no dying anytime in the next 30 years.
Not a problem, Brooke. I got that one.
You got that? Hey, I had a grandmother who was 105. I got that. All right. Not having a plan. So we've talked about the plan a little bit. And I want to talk about it just like a scunch more. How are you using the money you would have spent? And so this is for the PPP and the EIDL. There are very few businesses, unless you were a restaurant or a theater, or I talked to someone the other day who does production. It's a production company, so no one's filming commercials right now. Shocker. But you do have revenue coming in. And if you're getting a lot of your expenses covered, so the PPP is covering your 2 very biggest expenses, which is payroll and rent. Like, those are the 2. So those are getting covered. What are you doing with the money you would have been spending on that?
Right, and it might not be 100% of that, but it could be.
So think about that. And what is a good use of those funds? I do think that paying down some debt with that money that has now been freed up. Let's be very clear, you cannot pay down debt with PPP or EIDL money.
Correct.
However, because PPP and EIDL are covering some other expenses, it's going to free up some cash. So paying down debt, investing in marketing, though I didn't. Pam, you talked to a marketing guy who said this is not necessarily the time to spend on marketing unless you're really clear on who your
customer is and what you're trying to do, right?
Yeah. But really think about it. How are you going to use this money that's been freed up? And then I want to talk about PPP forgiveness. All right. There are 3 things. So as Pam said in the very beginning, there are 3 things. There are 3 things that we know about forgiveness, and we don't know everything. So, whoops, sorry, I moved the wrong way. The first one is full-time equivalents, these FTEs that you keep hearing about. And Pam, you are meeting with a
Employment law.
Employment attorney. I think our Tuesday Facebook Live is going to be with an employment attorney. And I know that you guys are going to go deeper into this and how to calculate it and all of that. But if your FTEs fall, and on Tuesday you'll go over this, but there are 2 time periods which you can look at to get your FTEs. If your FTEs fall by, let's say, 12%, then the amount of your PPP loan that can be forgiven is also lowered by 12%. So let's go back to that PPP loan that we got for $100,000. If we drop our FTEs by 12%, We're going to lose $12,000 worth of forgiveness. So now we can only get $88,000 of that loan forgiven. Oh, and by the way, we now have to take the $10,000 from the EIDL advance off. So now we're at $78,000. Okay. The second one is you have to spend 75% of the money on payroll. So if you don't, if you only spend 65% on payroll, then that 10% that you needed to spend is not forgivable. So again, on that $10,000 loan, where we've lost, we've lost 12% of our FTEs. We've had the EIDL loan, so we're at 78,000, and we only spent 65% on payroll. We're now at 68,000. Okay? So these things build on themselves. You really want to watch these. Spending 75% on payroll is a really easy one to control. Your full-time equivalence is not as easy to control, and you may just look at it and say, yeah, I'm going to take a loan with a 1% interest rate, and that's okay. All right, the third one is one that people aren't hearing about a whole lot. If you have a person whose salary you drop by 25% or more, I'm sorry, if you have a person who, yes, if you drop by 25% or more.
So you were paying me 100 grand before COVID-19, and now you're paying me 70 grand.
That $5,000 prorated, because we're only talking about 8 weeks, it's 2 months worth. That $5,000 prorated, do we know what $5,000 prorated by?
No, but I can do the math for you here.
You do the math, because did I mention, so it's about $400, right?
Okay, I'll take it.
We'll say $400. So now we've lost money because of our FTEs. We've lost money because of our payroll. Now we're losing, it would be $400 a month, so about $800 more dollars for forgiveness, because it is dollar for dollar how much you dropped their salary under the 25%. Now, I do want to clarify, and again, all of these things are things that you're going to talk to Caroline about on Tuesday. But if you drop, if you have an employee that you were paying $150,000 and you drop them to $95,000, if you were paying them $150,000 and you drop them to $75,000, you will not trigger this, because in the dropping payroll, it assumes that your max payroll is $100,000. Okay? So you can drop your $150,000 person down to 75 and face no penalties. All right. Those are our big ones. Pam, is there anything else that you can think of that we have not covered?
Well, I think the other thing on the PPP I know people are struggling with is hiring people back. If you did lay off people and you're trying to hire them back, they don't all want to come back.
Shocker.
And so we're not going to cover that here, because I think that goes down a rabbit hole and involves unemployment, and, you know, do they have to come back, and are they at risk of losing their unemployment benefits if they don't, and what if they are, you know, medically fragile? Anyway, it's just a rabbit hole to go down. But if you're having that problem, you're not alone, I guess is my point.
Yeah, I don't think you're alone. And I do know that you're going to cover some of it on Tuesday. But we also encourage you, if you have some of those kind of sticky situations, to talk to an employment attorney. There is one other thing that I want to cover, and that is PPP payback. So here is something that is very interesting. The documents for the EIDL loan are the same. They are issued by the SBA, and they are really stinking identical. I have now seen 3 sets of PPP loan docs, and they are all different, every single one. And when you talk about payback, there is one that the payback is set on the full amount of the loan, amortized over the 18-month payback period. If you get 95% of it, or let's say you get 75% of it forgiven, that last 25% is not actually going to be amortized over the 18 months. You're going to get it paid off in just a couple of months, which is fascinating to me.
Well, and I think that's another fascinating difference between the PPP, and I'd really like people to think of these two CARES Act loan facilities very differently, is there's a lot of variance of the PPP out there because it's financial institution by financial institution, whereas with the EIDL, there's one loan document. There's one lender, there's one process.
It comes from the SBA. So you may have to pay back your PPP loan, any amount forgiven, you may have to pay back based on what the payment would have been if it hadn't been forgiven.
Mm-hmm.
The one that we got is they take the amount that's not forgiven and amortize that over 18 months. So if all you have left is the, let's say, $10,000 from an EIDL advance, then you're going to pay, you know, the $10,000 at 1% interest back over 18 months.
So you might be using a big word there that people don't know about, amortized. Could I replace for the average for that word, that they would take what the loan balance was and spread it out over 18 months?
That's good. And then the third set that I've seen is interest only for the 18 months, and then everything's due at the end. So, you know, I think a lot of people do really what I did, which was like, I kind of like barely scanned through the documents. And let's face it, I read a lot of loan documents. You read a lot of loan documents. Everyone on our team over the years has read an insane number of loan documents. We are not attorneys. We can't give you financial, or we can't give you legal advice, but we know how to read the loan docs. And so I just skimmed through it really fast, didn't think a whole lot of it. I think that really, as you're taking this loan, or even now, go back and look at your loan docs and understand what your repayment terms are, because that could make a big difference. If you assume that they're going to take the $10,000 you owe at the end, and you're going to spread it out over 18 months, and the first month they're like, no, you've got a $4,000 payment and you weren't planning on that.
Yeah, no surprises.
Yeah, that's hard. And that goes back, Pam, to what you were saying on the planning. So it's not just planning how you're going to use the funds that come in, it's planning how you're going to use the funds that would have been spent but for this loan. And it's what the planning is for how you are going to pay it back and how you're preparing for that.
And based upon your plan, you might choose, again, on the EIDL, you might choose a lower amount.
Yeah. Okay. So Pam, we have 1 minute. Here's what I want to say. Look for an email from us over the weekend, because we really have been putting, or maybe on Monday, we've really been putting a lot of thought into the EIDL and all of this. So we're gonna reach out to you and offer to help on some of the EIDL things. And then Tuesday.
No, my conversation with the employment lawyer is on May 15th. So 2 weeks from today.
That's right.
Yes.
In 10 days. Yes, that's right. That's right. On Tuesday, I am talking to Emily Rush from Back Office Betty's, because a lot of people have fired people on their team, such as their receptionist. And so we're going to talk about how you can actually replace that position for less money. And then we think next Friday is the bankruptcy attorney, who's going to talk about some of the stuff we touched on today. Mm-hmm. And I think that's it. As always, if you have questions, You can reach us at Brooke at CathCap.com or Pam at CathCap.com. You can comment below the video. We'll get that. You can call us. You can get to us through the website, CathCap.com. You can send up a
You can DM us on Facebook, Instagram, or LinkedIn.
We're around. All right. Pam, thank you. And
Always a pleasure, Brooke.
all right. Thanks so much. Bye, everybody.